Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ed Cofrancesco, CEO of International Assets Advisory, to discuss the recovery, job growth, and inflation in front of the Fed minutes coming this Wednesday, May 19th. Ed, it's great to see you again. Welcome back to Trade Talks.
Well, thank you very much, Jill. Good to see you as well.
All right, Ed. And the question is, how do you think markets are behaving in light of this backdrop as we're talking about inflation and job growth and the speed of the recovery?
We think markets are actually reacting surprisingly well. When you think about it, we've had so much conflicting news, right? We are definitely in a recovery, but the job growth was so much lower than anybody expected. And some people expected the economic recovery to be even stronger than it has been. So we've had some mixed messages there. And then inflation was a lot stronger than, again, a lot of people expected. And of course, now we have some geopolitical issues with the Israeli-Hamas. I won't call it a war yet, but certainly hostilities and, there's warfare, if not war. These are all things that, in normal circumstances, the market probably would have been off 10, 15%. But instead, the market seems to have taken it in stride. So we think it's reacted surprisingly well.
Yeah, and it almost seems as if the market has been very directionless, right? This choppy trade that we've seen. Do you expect it as we learn more from the return to normal data, because we're still trying to understand what that looks like?
So I think the choppy trade that you're talking about is going to continue for a while. I think people are going to see some news, and maybe it'll be a little bit better, or at least meet the expectations that we have on the positive side, and the market reacts strongly. And then the next day, it'll be a bit of news that'll be a little bit more negative than we thought, and the market will sell off, and then it'll come back a day or two later, and we're going to stay there. I think we're going to continue to see an overall trend over the next 6 months, though, of the market inching up. It'll go 2 steps forward, step back, 3 steps forward, 2 steps back. Maybe it'll take 3 or 4 steps forward and then 4 or 5 steps forward the next day. It's going to be choppy, but I think we're going to see a general direction, as we have for the last, 10 months, 11 months since we started recovering from the initial sell-off of COVID last spring, that we're going to see a continued upward trend. We're expecting the market to continue to slowly but surely continue the upward trend till the end of the year. Beyond the end of the year, our crystal ball is kind of foggy right now because of all these points that we're making.
And with this backdrop, Ed, how would you advise clients to be positioned in this environment?
So while we're still bullish for the next 6 months, we are telling clients to exercise a great deal of precaution. We're asking them, let's see where we can take some profits off the table. Let's take some defensive postures, whether that's covered call writing, going and buying puts, maybe using something that a lot of people don't like, variable annuities. There's ways that you can participate in the market upside while limiting your downside risk. So we're looking at all these type of defensive strategies that we're recommending to clients.
All right, Ed, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Joe.